Depreciation Recapture. I'm sure you heard of this if you are a real estate investor. Do you really know what this is all about? Today, we'll use a simple way to explain this concept. Hi, welcome back. My name's Jane. I'm your host of Tax-Exempt Millionaire Club. If you haven't joined our community, feel free to do so by scanning this QR code. Today, I want to explain this depreciation recapture. Appreciation and depreciation. Those are two straightforward concepts, but there is another concept called depreciation recapture. Let's use this one example to really give you the clear picture what that depreciation recapture is. What you're recapturing, when, how much. Let's take a quick look. First of all, bad news. I wish I should highlight this in a big red font. Depreciation recapture can still apply even if depreciation was not claimed, which means for residential area, 27.5, the straight line depreciation. Commercial properties, 39 years. If you are not claiming the depreciation, when you sell this property, the depreciation recapture still applied, even you did not take those, which means you have to do it. Let's take a look at this example so you will really know what this depreciation recapture is. If you bought a property, 300K, you depreciated over time, the total depreciation is 50,000. Later on, after many years, you sold it for 350K. There's an adjusted basis, which is 300K minus the depreciated amount, 50,000. Your actual adjusted basis is 250K, not 300K you paid. And your total gain will be from your sell price minus your adjusted basis. In this case, it's 100K. So basically, in this case, the depreciation recapture amount is 50,000. And this amount will be taxed as ordinary or maximum allowable rate because you were doing the depreciation and the IRS wants to reclaim those depreciation back. Those depreciation was taxed as the ordinary income, and the remainder will tax as capital gains. Maximum allowable rate as of now is capped at 25% for this depreciation recapture. Quick disclaimer, I'm not a CPA, not a licensed attorney or financial advisor. I'm just sharing some knowledge. All I share here will be used for entertainment and education purpose only. In this case, we illustrate depreciation recapture amount is 50,000. And remember, if you did not take all of the depreciation when you own those property in the early years, the depreciation recapture will still apply. You're losing money. In this case, you'll have to pay extra on capital gain tax as well as the personal income tax on the depreciation capture. I wish this explained well what is the depreciation recapture. What can we do about it? What if you did not claim or you don't even know? There are several ways. One is just really time the sale very well when your tax rate is super low. Another, do the 1031 exchange and exchange it to another property with all the compliance and timeline you have to meet. And the third one is so-called step-up basis, pass the property down to your heirs when you die. In that case, all the capital gains, all the depreciation capture will be all gone because the person who inherit the property will have the step-up basis, which will be the fair market value for that property when that year it happened. That's the three solutions I could think of. If you have any other solutions or any suggestion, feel free to comment below. If you think this episode is helpful for you, please subscribe, like, and comment in our videos so you will not miss any future episode. That's all I prepared for you in this episode related to depreciation recapture. Like we always said, don't let the bank, tax, or outdated financial advice limit your wealth. Consider joining TMC today. Own your bank, your wealth, your future, all tax exempt. I'll see you next time. Bye-bye.